right, we're live.
Hey, good morning, everybody. Happy Tuesday. Hacking July 23rd. Um, we had a great, yesterday was actually a great futures trading day. We, um, we opened up with a gap up. We, um, we were looking for, we were looking for continuation into this 03, 05 area. We got it. There were several trades there, and I think the best one I had yielded like 30 points. The smallest was maybe a net 10 after I had exited out of the entire thing. So that was just a phenomenal day. We read it. We read it really well, and it appeared most of us were able to jump on that. Yesterday was also a day that, from the lows from last week, a lot of people accumulated, more text than you realize, kind of deploying some money off of stuff on the lows, and they rode those longs to the weekend, and that gave us an underlying level of support to the market. And those techs continued to move, and kind of took us up to the 56, 12, 15 area, and the SPOOs. And I'll get to the correlating a Nasdaq area, but it was all correlating really quite well. And then you had a little bit of, I'm not gonna, there really wasn't like profit taking, but people kind of pared down their position sizing. So that was simply a great reaction off of a nice little sell off of a couple of days. Over the weekend, they deploy some money into the text. It carries a bit into the Monday, of which there was typically summer Mondays, low volume, there's nothing, but that's really what kind of, like, that was the catalyst for the bid going into yesterday. And once again, when we've got volatility, futures are your friend. You've got to have your futures up. So that was pretty much the only trade yesterday. And notice the room was very, very quiet, by us, and by everybody. Um, that was a positive, because there was nothing to do. We had already taken the trades. It was summer low volume. Either you were still long some text that you were just kind of writing and milking and trimming your position, or you were just waiting for another future setup. But toward the end of the day, the text kind of remained bid. We kind of rolled up into this 15 area right in here, and there was acceptance up there. When you start seeing acceptance at a level, if you have option positions on, looking for a move, some sort of reversal, or even higher, the acceptance is telling you, I'm going to hang out of here and figure out what I want to do. And you dumbass that goes into the options, it's like you've got to manage your size. I was looking at a couple, but if you, depending on which strike you got, I'm not being critical of any one person. This is for anybody that was playing with that. That acceptance is like, you just sat there and it just withered away. I had one option trade on where I was thinking a little bit of a reversal as well. I was fortunate to be able to scale it, and I didn't add to the size, and I let my stop be my stop. And but it's just a reminder, when you see that we start having acceptance, that's suggesting is like, I might hang out here longer, build a new base, and I may want to trade up here. I may want to trade up here. Um, so I mean, that was entirely a possibility when the way that it was kind of accepting here. A few of the other techs could have caught bid, and Nasdaq could have kind of gone to a new high and kind of pull the ES up here. That was entirely possible. But anyway, so that was the net effect. It is okay not to do anything, especially in the summer markets or on any given market day during the regular year real time trading hours, when there's a lack of data, and we're coming into the day where it was preceded by a couple of big moving days. It's like the market's looking to kind of maybe retrace a bit, and maybe some of the stocks that were beaten down get picked up, and that was basically essentially the play we took with the futures off of that. So that was really that was the key thing, and I accepted. I get uncomfortable. I get uncomfortable. I mean, in a trading with our trading room, I get uncomfortable not saying anything. But I mean, let's be candid. I mean, we have a random chat. Are we going to like just be saying stuff to just be saying stuff? Or are we sitting waiting? Are we doing our homework? Are we like looking at other sectors? Are we studying, researching, looking at things? And then when we see something relevant, then we pipe in with something so that at least the room is constructive. And I encourage everybody, it's like to do the same thing, utilize the time. Or you can utilize the summertime, and if you've made your money by 10, 30, 11, get your butt out of here and go enjoy the day with your family. Go play golf. Go do something. Take advantage of that afternoon you were just provided. So that's that. Let's go to where are we at on the Nasdaq here? All right. So generally speaking, the SPOs are running flat. Nasdaq's were down tick about 23, 24 points. Glaring, we can see the purple purple rectangle here. That there's our base. We're looking to kind of make sure that we hang here. If we trade down below here, clearly we can trade lower. But there was a ton of price acceptance at this level, going all the way back to mid-June. And big institutions, dealers, they established their hands. Those are big funds saying we like these prices. We want to be able to participate here, and we're now back in that area. So they're now trying to figure out, like, given the new data and some of the politics around things, are we willing to kind of add to our positions here, or are we just going to sit on our hands and wait for the data that's coming out on Wednesday, Thursday, and Friday? PCE is Friday. And now we finally have a few of the tech earnings that are coming out post market today, and those are going to be some of the likely movers to the market. So this is exactly when people are sitting on their hands. So simply when you add those things up, it means it's a low expectation day, and likely a low volume day, and it could get a little trappy, but we'll sit and we'll look and see where the market opens up. We're kind of like we're running neutral right now, and we very easily could, move up, and it could be like 100 point gain, 80, 100 point gain in Nasdaq, or we simply settle back down to this purple rectangle. So we could do either one of those things, or we simply could just hang out here and chill within a 10 to 12, 15 point range for a while. That's possible. Don't push it. Don't think you're Be careful with the options on a day like today. You got to be looking for a trigger, because your options will hold their value up to about 10, 30, 11, and the longer we kind of hang out and consolidate in this 15 point range, your premium is just going to get shellacked. So just be cautious of that. That's all. So I'm going to go to the SPX chart, and I'm going to quickly. I barely have any lines, and that's a good thing. So in SPX, quickly, I'm just going here. That's a key level there, 55.03.04. Right here on the high side, I'm seeing SPX 55.77. Throw in the high 67. So this 67 to 77 is a resistance span in the SPX. So keep that in mind. If we trade up, the next level would be right around 56.06. We could trade up here, or we could trade back down here, and you can see this 55.43 area in the SPX. That correlates, I believe, to about the 5503, 5510 area. Well, the math doesn't really work there, but actually, let me do this. Here's where the math adds up. This 54.48.50 area, that correlates to the 55.03 to 010 area, which is the bottom of that big rectangle I had in the on the ES, or correlated to the Nasdaq, that big rectangle. So you know what? If we opened up right here, um, we're going to be down a few points, which brings us back into the range, and it's got a little work to do. So again, we could just trade, rotate down here, maybe come down and fill in the gap from yesterday. That's indeed a possibility, but it's going to get a little. We're going to need a little giddy up to kind of get over this area, 55.77 to go up in here. So those are a few thoughts, a few parameters I have. You know, be cautious. You don't need to stay scared. Trade scared. Have your levels. If you don't have your levels, reduce size or don't participate. This could be a day where you don't participate. So with that, I will hand it off to Lee.
Morning, everybody.
Good morning.
All right. So let's sort
A
of
little
zoom in.
volume.
Let's zoom in a little bit here, and before I zoom out. So 30-minute chart here. We came all the way back down to this 55.43. Now we've retraced back up to, and this is actually the 200 day, and I don't know if that's a coincidence on the 30-minute or whatever, but we're actually losing this 56.06 area, which if we lose this area, I think we're going to start another downtrend here. Yesterday feels to me like it was a bounce. I feel like we need to probe a little bit lower. I wasn't convinced with the mega caps and the buying. The down move in the morning was on high volume. Up move in the afternoon was on low volume. I'm just not. I wasn't convinced. It wasn't convinced that yesterday was like the bottom. It just didn't feel that way to me, and it's more of a gut thing than anything else. Is that yesterday did not feel like selling is over. So how do we play this here? So there's a couple of things that I'm looking at. This 14.15 level that we were rejecting repeatedly yesterday is right now sort of the cap. If we do get over this, I'm probably going to sit here at this 30 level. That would be a level where I think we are going to reject at least the first couple of times. If I'm wrong that selling isn't done. If I'm right that selling isn't done, I think that there's a really good shot that we're going to go and test this volume point of control. And we saw yesterday, we saw yesterday. So where was it here? Monday. So we saw this here yesterday morning. How fast, and let's actually zoom in even further. So this was yesterday morning, 56.06, sell 30 points. 56.06, sell, 10. Came back, tested it again, sold another 30-ish points. Then we recovered here, but look at the volume, and it's just declining as we climb. All right? So look at where the volume came in on sells. This is very simple volume price analysis where is the volume, and it's on the sell side. So now let's actually zoom way out. July 4th week. We've continued talking about this for weeks. Let's extend that out. Where are we auctioning? July 4th week. This is the next low volume one. Where were we auctioning? Down here. But down here, we move very swiftly through, right? So my suspicion is that this purple shelf here is going to be our holding level. We still need to keep auctioning down in here to build out a volume profile that we can then launch higher off of. That's my gut is that's what's going to happen. I don't think this bull run is done. I certainly think this is a pause spot, and I think that we have some mega cap earnings tonight that start. I think that that could obviously change 100% what the thesis could be here. But that's my initial thinking is that we're going to be needing to auction back down lower. And I'm going to put these. I'm going to put these spots back to where they were back in here, just because I don't want them to mess me up. But that's why we had these spots here, was solely because going back to that July 4th week, knowing we needed to fill in that volume profile, and now we're doing it. So if you look, this is where the top of that box was, that 30 area. So if we do come through that 30 area, that's why I'm thinking 56.30 might be a nice spot to take a shot short. So yeah, that's sort of my index thoughts right now on the SPOOs. But let's go over to this one. So this has been a trade that's been a pain trade for many years. A lot of people think the pain trade on this is still up. I don't know. I think the pain trade on this is if it were to retrace back below the breakout level of 12 or whatever it is. I'm still not convinced on this. This is not showing me anything that tells me this is a move here to stay. The other thing that's not showing me that it's a move here to stay is the TLT. The TLT has been, let's actually zoom way out on that. I mean, we can't even, let's put a level here. I mean, we can't even get above this area. Look at how much volume is here. I mean, there's no breakout in the TLT, which would be what I would suspect would need to happen to get a breakout in the small caps. We would need to get a breakout on the TLT. So that's sort of my gut, is that small caps are either going to stay sideways and be a nice range trade, or they're going to retrace and fail, because the thesis for many is that the Fed's going to have to cut rates, or going to cut rates. Bond market tells me they don't think the Fed's doing anything. So let's take that cautiously on the long side, certainly, and if we do get that retrace on IWM down to this 212, is it worth taking a shot? Yeah, I think it is. I think it's worth taking a shot to see if we can get a long move off of that. But to me, this looks like it was just a pure gamma squeeze. People got short trying to do exactly what I did, which was short this level at 1250 or whatever, and they got gamma squeezed. There was just so much put volume, and they all had to close at the same time, because very few believed that IWM was actually going to break out. And so I think that we can't really look at that as anything but a gamma squeeze. So on the single stock side, where is it here? Nike, we're finally getting a little bit of a move here back. I actually have this box highlighted. I think we had to go to all the way down to monthly to see where, yeah, this was support back in here from 2018. So that's why I had highlighted this area. So if we go back to daily, Nike's finally starting to make a little trend. We get the MACD that's way down here, way oversold. We're starting to get that curl up. Actually, the daily RSI is actually just coming back in above 30. That's how oversold this thing was. I mean, I could see a move to this 79.80 level pretty quickly in the next week or so. And if we can get into that gap, I think this can make a nice move back up. And you've got the 200-day up here at 98. So I think that an underside retest of that 200-day where it failed here. I mean, it's still in a downtrend. There's no doubt about that. I'm not saying the stock's going to rebound, but it broke the 200-day, came back, retest, fail. Came down here, came back to the 200-day, retest, fail. Would a test of the 200-day be so crazy? No, I don't think so. And we've got that all the way up nearly at $100. So That's really all I got this morning, and I'll turn it over.
Good morning. Just quickly go over what I'm looking at indexes. Obviously, I think that 5605 area from yesterday where we took, a few shorts that worked out really nicely, is now probably going to be the key level on the downside. We do have this yellow line as a weekly pivot that's dropped in there, no surprise. So, obviously it was the support and resistance area from yesterday, and now we lost it overnight, reclaimed it, and now that's a key area to hold. So it became a short area yesterday, probably becomes a long area today, as long as it holds. And then where we rejected here this morning is actually a 161.8. If I flip over to this chart, let's go out to the daily. Oops. There we go. So from this, December 21 high down to the October 22 low, that's where these measurements come in, and this 161.8 had acted as a resistance level before, and it's still relevant, and we actually got a rejection off it this morning. So that's at 56.1775. So we're kind of sandwiched in there right now. And then if we get over that, I have this 50 Fibonacci here at 56.3150, and I think Dan was talking about sitting there at 30 because it was a previous support also across the board here. And then I mentioned yesterday in the call this area, this little box here, mainly because this all-time high that we just hit last week down to the lows here, I'm measuring that retracement from last week, and the 61.8 of that retracement sits here at 56.5275. And then just above that we have a daily pivot and a monthly pivot. So that's why I had this box identified yesterday. And a lot of, when you go back to these, we talked about SPY yesterday on the weekly. I actually drew all these lines here. This is every bearish engulfing candle that we had on weekly historically. Once you start compromising the 61.8 of a bearish engulfing, you start to think that it could be negated. But a lot of the times these come up to the 50, the 61.8, and then continue down. So that's kind of the narrative right now is, are we going to keep going and negate this bearish engulfing, or are we going to fulfill it, come up to the 50, maybe the 61.8, and then resume selling? So that flips back over to the ES chart, and that's kind of in this zone would be the maximum I would expect. And the other thing, kind of messy looking. It looks a little better on SPX, but you do have somewhat of a inverse setup here. Measured move would be kind of up into this area. If you pop over to an SPX chart, it looks a little cleaner. On the inverse, and again, it would probably pop you up right about to this gap level here. So that's kind of the key thing to watch. We definitely have, some gaps around. We have still a little bit of gap to fill here, a little gap above, and then if we start breaking down, we've got some gaps here below to fill. So ultimately, obviously some tech earnings start coming in. We got some news this week, so it's kind of an interesting spot. Long term we're still bullish, but we're obviously in a little bit of a bearish pullback right now. How deep that goes is yet to be determined, but yeah, I'm kind of in the same camp as Dan that I think there's room to go lower for sure, and fill out some of these low volume areas. Earnings, Spotify is gapping up pretty big from their earnings this morning. There's some others, I think. UPS was one. Who else? GM, GE. Those were kind of the big ones. Coca-Cola. So just keep an eye on the sectors, see what's playing out. Yesterday, I think it was. I mentioned quite a few times the chip sector SMH ETF. I was tracking that all day yesterday because that was outperforming everything. And then if you kind of mirrored that chart alongside ES, it was almost, just candle for candle, almost identical. So I like to do that. Look for what's moving the market. Obviously, something like chips can play a big part in what's happening in the overall market. On the individuals, obviously Tesla is front and center today. We have this weekly chart. Market's going to open in a minute, by the way. This weekly chart just looks primed for higher, but who knows what's going to happen on earnings. We could get a little dip. We can remain bullish as long as we hold this 221 area. Lose that, and then we start to look at this as maybe a failed pattern and look for something else. But overhead resistance, really the next level up over this 258, 50 Fibonacci here is the 61.8 at 295. So I'm not going to play. I still have equity. I sold some yesterday around 250. I wouldn't play Tesla directly. I'll look at maybe for fun something like TSLL, which is a 2x leveraged. But the IV is going to be nuts on it, so you're going to need a really outside move to make anything. And we have Google earnings, Enphase. I mentioned yesterday. I'm keeping an eye on that. I do love this setup here. Probably won't take anything into earnings. If I do, it'll be longer dated for this larger move. But remember, these harmonics were set at about here would be the deepest it can go within this harmonic. If we get past this 88 area, then it goes into the shark or cipher territory, and this can come all the way down to like a 161.8, which would be around here, and still get this move. So we're kind of in an area where we really don't know yet, and best to wait for earnings. If we go out to a daily, we can see that this area is a decent support zone. But if we do get this dip to the 161.8, it almost lines up right with this little cluster down here. I don't necessarily anticipate that, but I'm going to wait for earnings and then see what this does. But I do like the setup. Unfortunately, waiting for earnings, this could just take off and capture most of that move. But we'll see what happens. Other than that, market's just open, so let's flip over to ES here. See what we're doing. So we're coming right down to this 05 level now.
So getting some sellers in the open here. So this NASDAQ.
Apple's selling pretty good.
Okay, this NASDAQ's 19,765 area. It was just like a little bit of a minor pivot level yesterday. Below that,
So we're getting some support here at the 05.
Yeah. I mean, that's expected, right? It's
Yeah.
kind of hanging out there for a bit. Once it finally, well, that was the level it was accepting that kind of started the decay on a lot of the options. So banks are slightly green. Meta seems to be holding its ground. It's probably one of the only decent ad that I had in the portfolio. It's been maintaining its ground. Meta. All right, so this would be interesting here. So look at this NASDAQ, the 19805, 807 area. I mean, that was the area that was supportive yesterday toward the end of the day. This could give us a little bit of a tell here. This could be a decent short area. Kind of, it's kind of a mixed read. It's kind of a mixed read on the SPOOs right here, but I mean, that's definitely a clear signal there. See what we get off that.
Yeah, it's definitely a tough spot.
Yeah.
I'm kind of stuck in this this little range here.
But I literally, I have this SPOOs and I've got the NASDAQ up side by side right now. And the NASDAQ is just giving such a cleaner line of where we're at.
Yeah.
And I just shifted even SPOOs to RTH hours. And you can just tell if you're only looking at, and again, I beat this up. It's like if you're only looking at the SPOOs, it's like it's pretty hard to initiate a trade just looking at that.
Right.
You just can't. So I'm just kind of looking at this NASDAQ 19805, 807 areas for the do or die. I'm down to a 1 minute chart at this moment. So while I'm watching this area, I'm also contemplating what sort of size with the SPOOs, if there's a trigger there. And I will tell you right now, I'm probably down to 1/8 size at this point.
Yeah.
I mean, it's too wide of an area. I mean, because all right, so now the Nasdaq got above that 19,810 area, so it just tells me it's not ready to support a down move yet, but it has its VPOC from 19,822 from yesterday. So we're still just kind of in the resistance area on that. Amazon's up. Oh, Amazon's up 280, trading at 488. Let's see where I'm at on that. Actually, I have some 185s. I thought I got on the cheap from last week lows.
There's all kinds of news stories that keep flashing that Biden's dead or almost dead.
You know what? There's been some weird stuff, some outlier stuff. I saw some things that, few reporters were getting news out of uh, a few national reporters were getting news from Vegas reporters of, like, I guess when he flew over, dropped through there somehow. These guys were like, they were talking about him being medevaced somewhere, and
Right.
I know he had the COVID, but I mean, there's definitely some weird stuff going on.
Yeah, Harris yesterday was on talking to their volunteers for the campaign, and Biden spoke on the call, and she made a sort of a faux pas or a Freudian slip or whatever. She said thanks for being on the call, but she said thanks for being on the on the call.
Exactly, recording.
So I'm like, oh, they're gonna grab that. So there's some weird stuff going on for sure.
Okay. All right, Amazon. And I just don't trust Amazon, man.
I know.
I'm just looking to. It's in this 186 area. I got to sell half of these things.
I filled short 15, 56.15.
You did? Okay, thank you.
That's a decent area. I tried to get a long down here and I missed it, but
all right. So basically, I had a bunch of those Amazon 185s. I just sold half of them to recoup all my basis. You know what? I think I just want to sell it all. I don't trust this.
all right, I'm gonna bounce off here.
All right. I sold the remaining.